this hearing of the Securities, Insurance, and Investment Subcommittee to order. I want to begin by thanking Ranking Member Warner for his partnership, not only in this subcommittee, but on countless other initiatives. He is an incredible leader on AI policy issues and, of course, in the intelligence space as well. Next, I want to thank the members of our bipartisan witness panel for joining us today, Mr. Kalinich, Mr. Cohen, and Dr. Cox. We appreciate the expertise you bring to this important discussion on the growing role of artificial intelligence in capital and insurance markets. The title of today's hearing, Guardrails and Growth, captures what we're here to do, examine how AI is transforming financial services and explore how Congress can foster innovation while promoting transparency, accountability, and smart oversight. AI is here, and it is not going away, and it has already made a significant impact across the financial system. In capital markets, firms are using AI to analyze massive volumes of data in real time, from trading patterns to financial disclosures, to guide investment decisions, execute trades more efficiently, and reduce costs. Asset managers are using AI to identify emerging risks and opportunities that traditional tools might miss, while exchanges are integrating AI into market surveillance systems to detect manipulation and protect market integrity. In insurance, AI is reshaping how companies assess risk and deliver coverage, particularly when it comes to underwriting businesses. Insurers are using machine learning to analyze structured data such as claims histories, industry benchmarks, and even real-time operational data to better understand a company's risk profile. These tools are helping insurers price policies more accurately, speed up underwriting decisions, and expand coverage to companies that previously may have been too complex or too risky to evaluate. That said, underwriting policies for businesses using AI is exceptionally difficult because the insurance market's understanding of generative and other forms of AI is still in its infancy. More work needs to be done here to provide clarity, whether by congressional action or through the work of standard-setting bodies like the National Institute of Standards and Technology, or NIST. Fraud prevention is another area where AI is already delivering tangible results. According to the Card Policy Council, one major credit card network's AI-driven security enhancements have boosted their fraud detection rates by up to 300% and prevented over $50 billion in fraud in just the past 3 years. Another has blocked over $40 billion in attempted fraudulent transactions. McKinsey has reported that AI systems can reduce fraud detection costs by 30% while improving true positive detection rates and reducing false alerts. This is exactly the kind of progress we should be encouraging. That's why today I'm reintroducing the Unleashing AI Innovation in Financial Services Act with Senators Heinrich, Kim, Tillis, and House Financial Services Chairman French Hill. This bipartisan bill that would create a venue for financial institutions and regulators to work together to test AI projects for deployment. By creating a safe space for experimentation, we can help firms innovate and regulators learn without applying outdated rules that don't fit today's technology. We've also seen how the wrong approach can create serious problems. Last Congress, former SEC Chair Gary Gensler proposed the predictive data analytics rule, which I believe would have imposed sweeping, unclear restrictions on financial firms developing or deploying AI without a workable framework. That rule would have slowed innovation and raised compliance costs and blocked out smaller players. That's why Ranking Member Warner and I led the opposition to stop that proposal. We need regulatory frameworks that both support innovation and protect consumers. As AI continues to evolve, regulators also have an opportunity to modernize their own operations. AI can help agencies conduct smarter supervision, reduce unnecessary burdens on smaller institutions, and focus resources where they are most needed. There's a real opportunity for public-private collaboration in this space, and I hope today's hearing will helps us think more clearly about how to make that happen. I want to again thank our witnesses for being here today. You are experts in your fields, and your insights are critical as we consider next steps in policy and proposed legislation. With that, I'll turn it over to Ranking Member Warner for his opening remarks.
Well, thank you, Mr. Chairman, and thank you for not only working together on this, but a whole host of other projects. I do want to make sure that the audience acknowledges the fact that Mike Rounds was one of the senators who hung in on AI. I remember a year and a half ago or so when this was fresh and new, and we'd had these bipartisan meetings, and there'd be like 30 senators for the first meeting. The second meeting got down to like 12. The third meeting got down to like 8. By the fourth or fifth meeting, because this is really hard stuff to get and understand, but Mike Rounds hung in through the whole process, and he is a great, great person. I say this to my colleagues, to partner with on a lot of projects. I also want to welcome the witnesses. I really do think your testimony is going to be critically important, as we all, at least in my feeling. I still need a lot to learn on the constantly changing evolution of AI. I think back, way long ago, 3 years ago, when I felt like whoever's going to win the AI race would be who had the most data, then it was who has the most compute. Now I think it may be who has the most electrons. But this is clearly an emerging field. And in financial services, I see great opportunities for improving efficiencies, dealing with costs. Senator Round just went through some of the areas in terms of fraud prevention, all great upsides. But with so many new technologies, there's an upside, but there's also potentially a downside. And I think we need to understand that. And hopefully, we can set some guardrails that will help provide certainty. Certainty is clearly what the regulatory environment needs to be, certainty in what the risk of deployment, and certainty in the fact that if there are risks, how the law will address them. And I don't think we can underestimate this. For example, I've been working with Senator Kennedy on this committee and looking at specifically the financial sector and AI. If to me, as somebody who was part of the original Dodd-Frank, where we set up FSOCs, if it seemed to me if there was ever a item that was tailor-made for FSOC in terms of its original intent that look across all the regulatory channels, it would be AI, because it touches so many parts of our financial markets. And we hope, again, that legislation will move forward so that we can have that kind of broad-based approach. We've also seen, I think, AI, Senator Rounds listed some of the positive aspects that we've seen on risk mitigation. But I've recently seen where I think AI can be used candidly in a very anti-consumer way. And that's what Delta Airlines is starting to do in terms of AI tools used for what I would call surveillance pricing. We all know there's surge pricing. Tickets for planes cost more around the holidays and cost more to go south in the winter than it does in the summer. That makes sense. But surveillance pricing, where Delta has basically enlisted an AI, Israeli AI firms where they have collected massive amounts of data. Do we really want a airline to know that if you've got a death in the family and you need to go to town or city X, or maybe not so dire consequences, if you've got Taylor Swift concert tickets in city Y and they know that, and they can individually price to collect a few extra dollars? I mean, and this is not an imaginary tool. They're talking about moving from 4% to 20% in their own market. Other airlines have started to see with the pushback. We're not going to do that, but they've predicted that you could increase profits for the airline industry $4.4 trillion. That's a lot of money based upon a surveillance pricing scheme that I think we at least ought to have more information about before we move forward. And finally, one of the things that Senator Rounds and I work a lot on in terms of competition with China. And China is not playing for second place in the race for AI. And one thing that I believe, and I think we see this in AI, is I think there was a presumption amongst many, and myself included maybe a couple years back, that China was good at potentially stealing technology, but they weren't that good at innovation. I think that's changed. I think China in too many domains is innovating close to the race, close to the level that we are taking in this country. And we desperately need, I think, AI policy. I think this subcommittee's work will be a start towards that, and I welcome the witnesses and again thank the chairman for holding the hearing.
Thank you, Senator Warner. We'll now move to witness testimony. Your full written statements have been submitted to the record, so I would ask if you would try to keep your oral testimony to 5 minutes. Our first witness is Mr. Kevin Kalinich, who is an intangible assets global leader, whatever that is, at Aon. Mr. Kalinich, if you would please proceed.
He looks like a pretty tangible guy.
Yeah.
Good morning, Chairman Rounds, Ranking Member Warner, and members of the subcommittee. My name is Kevin Kalinich. I serve as Intangible Assets Global Collaboration Leader at Aon. Thank you for the opportunity to testify today to share Aon's insights regarding the following 3 areas related to AI. 1, insurance is a financial mechanism that enables innovative technological growth. 2, AI perils are unprecedented, so we must customize balanced guardrails. 3, public-private AI collaboration will maximize AI growth. The insurance industry plays a pivotal role in enabling and shaping responsible AI adoption. Insurance does more than transfer risk. It incentivizes behavioral changes, imposes performance standards, and validates operational discipline. Insurance underwriting, combined with statutes, litigation precedent, contractual allocation of liability, and evolving standards such as the NIST AI Risk Management Framework, set thresholds for what is considered an acceptable risk. Where these guardrails are strong, underwriters are more willing to extend broader terms with better pricing. This creates a virtuous cycle. Good governance leads to better insurability, which in turn supports innovation and consumer protection. At Aon, we address these challenges using our proprietary cyber, property, casualty, and directors and officers risk analyzers to map the frequency and severity of AI-related events across sectors. Such tools help translate risk into measurable risk mitigation action. The estimated potential range of AI frequency and severity loss estimates varies materially. Geoffrey Hinton, the 2024 Physics Nobel Prize winner, quote, for foundational discoveries and inventions that enable machine learning with artificial neural networks, end quote, sees 2 main future possibilities for the relationship between humans and AI. Either AIs take over and humanity goes extinct, or humanity successfully learns to live with superintelligent AIs and greatly improves healthcare, the financial industry, productivity, standards of living, and reduces poverty. Many AI exposures are similar to existing perils, such as cyber and employment practices liability. So we can borrow from historical frequency and severity loss data to underwrite and encourage risk management best practices. However, static models lack sufficient historical loss data to underwrite some critical AI-related exposures with confidence, such as deepfakes under crime policies in the financial industry, hallucinations under E&O policies, autonomous robotic faults under casualty policies, and the potential for AI to be misused to enable chemical, biological, radiological, and nuclear threats. As a result, some insurance carriers are inserting AI-related exclusions or sublimits into base policies. To help close these gaps, insurers and brokers are creating new AI-specific policy endorsements based on AI-enabled Bayesian frequency and severity actuarial modeling. In fact, a few cutting-edge insurance carriers have created AI-specific insurance policies. A coordinated approach to regulation is needed, which combines thoughtful, state-based solutions with overall consistent predictability on a national level. For example, the National Association of Insurance Commissioners set forth the model bulletin on the use of artificial intelligence by insurers, which has been adopted by over half of the states. Since the McCarran-Ferguson Act delegates to the states primary responsibility for regulating the business of insurance, we suggest that the affirmative safety principles set forth in the model bulletin be part of the national framework, which insights I shared with the Federal Insurance Office at their AI advisory meeting at the end of 2024. Consistent with past administrations, America's AI Action Plan, released by the White House last week, highlights the benefits of comprehensive strategy to bolster the U.S. leadership in artificial intelligence. The plan recognizes the urgency to accelerate innovation, incentives to build AI infrastructure, and lead in international diplomacy and security, all while acknowledging the need to address potential risks and promote trustworthy AI. Each of these three pillars are promoted by Aon's recently launched Data Center Lifecycle Program, which helps clients manage risk and deliver cloud and AI infrastructure faster. Legislation like that mentioned today by Senator Rounds address potential risks and promote trustworthy AI, and could help build the right architecture for safe AI deployment. For Aon and our clients, we welcome public policy that will ensure that liability frameworks are clear, that insurance markets remain viable, and that AI developers and end users alike can act with confidence. Let's work together to ensure AI becomes not just a technological breakthrough, but a force for good, guided by insight, trust, and shared responsibility. Thank you again for the opportunity to share Aon's perspective. I look forward to addressing your questions.
Thank you, Mr. Kalinich. Next will be Mr. Tao Cohen. Mr. Cohen is the president of NASDAQ. Mr. Cohen, please proceed.
Thank you, Chairman Rounds and Ranking Member Warner. I appreciate the opportunity to testify on NASDAQ's responsible use of AI. Technology has always been an integral part of NASDAQ's ethos. Since our founding as the world's first electronic exchange over 50 years ago, we continue to provide clients with innovative solutions to help them navigate the complexity of the financial system and solve their toughest operational challenges. In addition to our listing and trading services, today we build leading indexes, provide mission-critical technologies that enable more than 135 markets around the world, empower financial institutions with market-leading regulatory compliance technology, and enable banks of all sizes to prevent financial crime. We're also the first highly regulated exchange operator to move markets to the cloud, and the first to offer an SEC-approved AI order type. Through the work we do every day, we power economies and contribute to a more sustainable and equitable world. Our solutions are focused on supporting clients across three key pillars, which are core to our long-term mission. They are enhancing liquidity, cultivating transparency, and strengthening integrity. As a leading global technology provider and an operator of exchanges in the US, Canada, and Europe, we understand the power of innovation to solve society's toughest challenges, as well as the importance of sound regulation to ensure we create and protect a system that works for all of us. We recognize that emerging and new technologies introduce both benefits and challenges. The rapid expansion of AI in financial services illustrates the need to balance technological progress and thoughtful regulation. AI-powered tools are already revolutionizing fraud detection, code development, and importantly, the customer experience. By helping institutions process massive volumes of data to detect patterns and relationships that were previously just noise. However, these advancements can also introduce risks, and we acknowledge that. At NASDAQ, we're focused on the long-term implications of these technologies to ensure we embrace the potential of innovation in a responsible manner. We've established a robust company-wide process to govern the implementation of AI in our products and business operations to ensure that we scale our capabilities with proper security, oversight, and transparency. We strongly believe this is the foundation to ethically and securely unlocking the power of AI. Recent developments regarding generative AI have brought AI into the public consciousness. This technology, though, has been ingrained in our services for years. So while the calls for caution are appropriate, and it is also right to believe in the transformative power of this technology. Right now, in our products and across our markets, AI is enabling fairer, more transparent, more efficient markets and a better financial system. Importantly, we're committed to ensuring that we always drive towards outcomes that positively impact the wider financial system and all participants. My written testimony provides more details on how our solutions are designed to accomplish this. At NASDAQ, we believe responsible innovation begins with strong guiding principle and robust governance. Our approach to AI and any technological advancement is rooted in transparency, accountability, and a deep understanding of the markets that we operate. As we continue to integrate AI across our businesses and our products, we're committed to working collaboratively with our clients, industry partners, regulators, to ensure that these technologies enhance and not compromise the fairness, integrity, and the competitiveness of U.S. capital markets. With that, I'm happy to answer any questions that you may have, and thank you for having me today.
Thank you, Mr. Cohen, for your testimony, and we look forward to the Q&A as well afterwards here. Next will be Dr. David Cox, the Vice President for AI Models at IBM Research. Dr. Cox, please proceed.
Chairman Rounds, Ranking Member Warner, and distinguished members of the subcommittee, thank you for the opportunity to appear today before you. My name is David Cox, and I serve as the Vice President for Artificial Intelligence Models at IBM Research, and I'm the IBM Director of the MIT IBM Watson AI Lab. At IBM, we believe that AI represents a generational opportunity, one in which the benefits massively outweigh the risks, including in the financial services sector. From automating routine processes and enhancing compliance to powering customer service and investment research, AI can unlock untapped productivity, increase resilience, and deliver meaningful value to customers. But as we capitalize on these advances, it is imperative that we proceed thoughtfully with guardrails in place to manage risk, enhance transparency, and promote trust. As with any new technology, there are risks and concerns we must address and keep in mind as we harness technology's power. For example, there is a growing concern about the level of transparency in how a given large language model was created. LLMs require enormous quantities of training data, and few LLM builders are fully forthcoming about the data used to train their models. This lack of transparency can pose problems for any enterprise, but especially in regulated industries. Many leaders in the financial services sector with whom I've spoken have expressed a legitimate desire to know what data went into the models that they're using to build and deploy their solutions. But one of the biggest risks in the industry is that we won't deploy AI fast enough to gain early adoption benefits, both for the economy and for consumers. In order to help expedite AI adoption, responsible AI governance is key. As the financial industry knows better than most, trust takes years to build and seconds to lose. In regulated environments, firms must understand exactly what data underpins their models and be able to audit those systems over time. That's why IBM's enterprise AI efforts are grounded in three principles: open, trusted, and secure. We strongly believe in the value of open source AI. It enhances security, trust, and collaboration through transparency, enables smaller firms and research organizations to compete without prohibitive upfront capital costs, and it expands the pipeline of future talent that our country will undoubtedly need to ensure that we remain competitive in the global ongoing AI race. A healthy, competitive AI market ecosystem requires open source AI to ensure America's AI future is controlled by the many, not only a select few. Transparency is a cornerstone of trust. The institutions that use models should know what's in them, especially in industries that deal with sensitive information. When it comes to security, organizations should apply a risk-based approach to secure the data, the model's usage, and the infrastructure on which the AI models are being built and run. To promote an environment that appropriately balances the value of innovation against the needs for reasonable guardrails, policymakers should prioritize three things. First, support of open AI ecosystems. Encourage open source contributions and academic industry government collaborations. These partnerships drive safety, transparency, and innovation, just as they did in the internet's rise. Second, use case-based risk frameworks. Regulate the application of AI, not just the technology. An AI model used to auto-summarize SEC filings should be governed differently than one used for autonomous financial trading. And third, transparency requirements. Enterprises should be able to apply best practices to answer what data was used to train this model, what decisions did it influence, what safeguards were in place. Generative AI is here. The question is not whether we use it, but how. At IBM, we believe the broad social and economic benefits of AI massively outweigh the technology's risks. Through thoughtful deployment, responsible governance, and most importantly, a commitment to open technology, we can capture those benefits while mitigating the concerns. Thank you. I look forward to your questions.
Dr. Cox, thank you very much for your testimony. We're going to have lots of questions today. Each of us will work through about 5 minutes at a time. I'd like to get a question in for each one of you in my time period, and so I'm going to kind of be quick on my questions, and I'd ask you to be brief so that I can get to everybody here in about a 5-minute period. Dr. Cox, as an AI model engineer, in just a few words, how can we improve the transparency of models, particularly in high-impact sectors like financial services, so that regulators and institutions can better understand, evaluate, and trust their outputs without stifling the innovation necessary to stay ahead of our competitors?
That's a great question. Thank you for that. I think there are really a couple parts to that. One is open models, an open ecosystem. It allows transparency. It's a tremendous lever for us to be able to engage more people, to have transparency, to understand what's in those models. The second piece is having strong governance frameworks, such that when we deploy models, we understand the stakeholders, we can track those models over time, and ultimately that gives rise to the kind of auditability and transparency that we need in this industry.
Thank you, sir. Mr. Cohen, how can AI be used to improve market surveillance and identify emerging risks such as manipulative trading patterns or flash events without compromising fair access for smaller market participants? You may want to turn your mic on. There we go.
So we currently employ AI in our surveillance solution in 2 ways, and they're very important. One is alert calibration, where we run different scenario tests on the type of trading activity we look at and see in the market. And as trading becomes more sophisticated and more complex, training and calibrating the alerts to make sure that they can identify real market abuse versus false positives is incredibly important. So you can reduce the false positives and focus on the higher risk items. That's number one. And the second thing that we're doing is we're helping investigators. And we're helping investigators through Gen AI, where once an alert is generated, we can then take all the manual tasks that an investigator otherwise would have to conduct themselves and could take hours for them to conduct. It could take minutes. And then we can also rank it in terms of the probability of risk associated with it. So you're increasing the speed, the efficiency, and the effectiveness of the investigator to identify patterns of market abuse. And so that's what we're doing in financial crime today, or market abuse today.
Thank you, sir. Mr. Kalinich, as AI tools are increasingly integrated into underwriting, claims analysis, and risk modeling, how is the reinsurance industry approaching the challenge of ensuring companies that develop or deploy advanced AI systems? How has generative AI versus machine learning changed this ecosystem?
The reinsurance markets are critical to the long-term success of insurance because they focus on non-correlated diverse risks that allow more capital to be deployed. An analogy can be made to cyber insurance, where early on there was not enough capital. There wasn't enough limits for the insurance. Over time, we developed actuarial models so that we could better determine the frequency and severity of the cyber risks. AI is going to be similar. We have to have some type of benchmarking, some type of actuarial modeling for the frequency and severity of the risks. The reinsurers are in the process of developing those type of models and aggregating information, loss data from the insurers so that they can deploy greater capital, which will spark more growth for AI development.
Thank you, sir. I've got a minute left, but Mr. Cohen, I've got to ask you a question that I think is one that it may be a little bit of a curveball for you, but I want to try it anyway. We know that our adversaries on an international scale would love to have the ability to influence using cyber operations, our financial institutions and financial capabilities in our markets in particular. Simply being able to delay milliseconds on trading activities within any one of our markets could be really detrimental to the security that we expect and the stability of the markets, including perhaps even shutting them down in some cases. Can you talk to us about what the threat of AI being used by other adversaries might be in the the need for us to have a better system in place as quickly as possible to detect and correct those abnormalities that might be being used by adversaries in the future?
Yeah, thank you, Chairman Rounds. That's a very important question because investor confidence and trust in our market, and you've heard it from the other panelists here, is paramount to the way that we operate our markets. And whether it's risk introduced by AI or any other technology the bad actor might be using, we must have a very robust and mature info security posture, and we do at NASDAQ. As a highly regulated institution, we have Reg SCI that we follow, and we also understand the role that we play in the market. So our CISO and Chief Information Security Officer uses the latest and greatest tools. He coordinates with industry and peers. This is not a competitive element for us with other exchanges. This is one where we share and we collaborate, and together we are stronger than alone when we're trying to defend our markets. And so being able to collaborate, share that information, making sure we have a mature posture, and very importantly, training our employees. So most of the risks are not introduced through the technology coming through our systems because we air gap them. They're very well designed. They're architected in a way that protects them. The most important element we can have is to train our employees on what to do, what to look for, and what not to do. We are a global company with 9,000 employees, so we take that responsibility very seriously, all the way to the CEO level where we make it part of our town halls.
Thank you. Thank you, sir. Senator Warner.
Thank you, Mr. Chairman. I also just, all three of you sound like AI optimists, but you also said along the way, we got to have some structures. And I think back to where Senator Rounds and Senator Schumer were leading this effort where we had all the biggest names in AI. And remember, I think Schumer asked, how many of you all think AI needs to be regulated? Everybody raised their hand. Everybody's in favor of regulation until you put words on the page. And I worry that we're frankly going almost completely in the opposite direction of putting words on the page around some of this regulatory place. And I just worry, I think back, most of us would think if in 2014 we'd put some guardrails around social media, at least for our kids' mental health, we'd be in a better spot. We didn't. And social media is tiny compared to the potential that AI has. So I think I'll pick up where Senator Rounds left off. Mr. Cohen, I spent a lot of time on cybersecurity and the ability for a domestic, or Senator Rounds said, foreign entity to inject malicious cyberware in the training of the AI models could be hugely problematic. Talk about what, and you just said, you're stronger with a group than individually, what NASDAQ is doing and what kind of public-private entity that maybe governs all the exchanges are looking at trying to set those cyber standards so that kind of injection into the model doesn't take place.
Thank you, Senator Warner, for that question. Maybe I'll start with part two of your question, which is the public-private partnership. We believe the collective intelligence is incredibly important to solving these problems and solving them in a timely manner. And the example that I would give in the way that we're looking at it and we're trying to conduct it for financial crime, for fraud, which is a real drain on our economic system, is we have a solution by the name of Verifin. We make sure that we have a consortium of data that allows us to detect and identify patterns of financial crime that no single institution on their own would be able to identify, because we're looking at 650 million counterparties through a consortium of data in the cloud in a way that allows us to reduce false positives, but also identify.
But is there an organization that's doing that? That's this collection of entities? I just think, again, if you can slow down trading by milliseconds, or somebody can inject into the training model false information, who is the entity that's supposed to be looking at that? And then also, let's assume something gets through. Who should bear the liability? Is it, I'm sure you're probably not going to say NASDAQ, but is it the AI developer? Is it the AI model that underlines that?
Well, I actually do think there needs to be accountability, absolutely. And so your question on the markets, there needs to be accountability at the model level. It's just like an employee. If we call it a digital worker, it's a worker. And there needs to be accountability. And it's a highly regulated entity. I would just say that you would look
Sir,
at.
let me please just answer the question. Is there a public-private entity that is made up right now that are setting these guard rules across all the exchanges? Yes or no?
No, we need one. We need to have that discussion.
And if there was this AI-driven liability that found its way into the system, where should the liability lie?
It would be shared across the entity that's responsible, as well as the entity that was responsible for the attack or for instituting that. And so
I don't fully understand that, but just let me see where we don't talk about maybe in malicious. My time's running down. Price discovery,
yeah,
critical to markets. But it's very easily, you could envision, I apologize, I may not get to the other witnesses, but I got a lot of questions for you both as well. But just, you've got a series of AI models, and if they're all kind of trained on the same data, don't you end up then, you could have this kind of notion of price herding because all the models are coming out with the same result, and then you've got price herding as opposed to price discovery.
Yeah, but we live with that today. Let's be clear about that. So the models that exist today in our markets that do not use AI, you have developers and engineers and quants that go from shop to shop to shop. The real key there, Senator, because we deal with these problems today, is to make sure that we have controls in place from whether it's a kill switch we have in the market that can stop something that we see initially and we can stop it very quickly, or the rules we put in place to make sure that they're testing their algorithms and testing any technology they put into the market adequately. But that happens today. This is not new.
Yeah, I wish I had heard from you something that says we don't have this multi-exchange collaboration set up yet, but we're planning on it. What I'm hearing is it's still something that sounds individual firm driven.
Well, this is a question for the SEC in terms of bringing the exchanges together in that way. But we have, over the last 10 years, the exchanges have worked collaboratively and said this is not a competitive issue. We need to come together, whether it's on AI and cybersecurity or anything that would affect price discovery. We do collaborate, but we also work with the SEC and FINRA on that. SEC and FINRA, part of their obligation is to bring us together and make sure that we can do that.
My time's expired. I just want to get one last question. Just, is AI a difference in kind, or is it just, are you saying it's simply a continuation of existing technology growth?
It introduces more complexity, more complexity into the market, more that we need to think about, but it's an extension of what we see today.
Thank you.
Senator Reed.
Well, thank you very much, Mr. Chairman. And gentlemen, thank you for your excellent testimony. Mr. Kalinich, insurance companies are using AI now very intensively to underwrite new policies and to process claims. And one of the emerging issues that you have to deal with is climate change. How are insurance companies using climate science in their AI models? Is that being done regularly now?
So it's being done increasingly now. So what they're doing is not just reactionary to a natural disaster that might be caused by climate, but they're actually now having monitoring out to try and predict when there's going to be a wildfire or predict a hurricane or predict flooding, so they can actually mitigate the risk before it happens. So when the hurricanes came in the southeast this year, they actually were in advance. They sent out drones that could actually start doing claims adjusting to get more accurate and more real-time loss data to get claims paid quicker and more precise.
So as we go forward, we're going to need more climate data to enhance the model's abilities to predict and to react. And it seems that many of our research efforts are being stymied by the administration, so that there's a dismissal of climate as a factor. But for insurance companies, it's dollars and cents. Is that right?
So I leave the administration and congressional to you experts. With respect to the insurance companies, though, you can only get insurance for this property or casualty or liability if the natural disaster possibilities are underwritten, which by necessity takes climate change into account. Yeah. So in order to get insurance, companies have to take that into account and evidence their best practices to address these critically important issues.
And a great deal of the data, the research, et cetera, is from federal and other non-insurance sources.
They're from a combination of different sources, correct?
Thank you very much. Dr. Cox, the unemployment rate for recent college graduates was 5.8% compared to 4.2% for the overall population. It's kind of a reverse of when I was getting out of college last century, where you walked into a good job and you were on your way. LinkedIn's Chief Economic Opportunity Officer has warned that the bottom rung of the career ladder is breaking as AI increasingly handles tasks that would normally be young college graduates. If AI models eliminate many of these entry-level jobs, how will the next generation prosper, develop skills to move on if they can't get their first job?
Thank you for your question. I've been in technology for a little while, and I've seen trends of ups and downs, hard markets to enter into with a college degree, good times to enter into computer science, for instance, and it varies. One thing that we've seen, we do research with economists at MIT as well as with computer scientists as part of our MIT-IBM collaboration, and there is a growing body of evidence to suggest that AI doesn't eliminate jobs, but rather addresses certain portions of an occupation, or different tasks can be automated to different degrees, and that also in many cases that lower skilled workers actually are advantaged by having AI tools. It actually brings them to another level where they can be more productive. So I think it'll take certainly time. There'll be change in labor markets. I think we're all learning and studying this, but I think the potential is certainly for us to do more and not to replace people, but to augment them, to make them even more effective and productive.
Well, I think that's the aspiration we all should have, but I think we have to begin federal, state level to change our educational structure to prepare people for a world in which you won't be hired as an actuary because machines do that. So that's something I think we're not yet up to speed yet. My time is expiring, but a quick question, Mr. Cohen, I'll ask you. We recently, in our big, beautiful bill, so to speak, we're debating the prohibition of states from creating their own AI regulation. It fell out of the bill, thank goodness. So at this point, legally, states can have AI regulation. We've all talked about transparency, all the good words we've mentioned, but that only happens if someone is there with a cop on the beat. So is your approach that we should have state regulation, certainly if we don't have national regulation?
Our concern would be if there isn't alignment and harmony on the regulatory front, then it introduces complexity and won't bring the balance between innovation and safety. And so we would not want to see a balkanization of regulation. We wouldn't want to see it at a state-by-state level because, again, that would probably impede innovation and keep some players out from actually experimenting. And so the greater clarity we can have, the greater certainty that we can have in general in markets, that you're going to see more participation and more embracing of transparency.
Just a good point. I believe New York State has already stepped forward with regulations, and in many cases they're the leader in sort of financial regulations, better sometimes than the U.S. government. Would that be the model that you would support nationally?
I would have to look at it more deeply against other models, but it's more important that we would just have a single standard. And again, if you have lots of standards, people will go to the lowest standard, and that would be regulatory arbitrage, and we would not want to see that happen.
Right. And the only thing worse would be no standard, and it'd be a gunfight in the Old West. So thank you.
Senator Britt.
Thank you so much, Mr. Chairman, Ranking Member, and witnesses for being here today. Just to comment on what Senator Reed said, I think when we're looking at this kind of sort of uncharted territory, what I don't want to see is us end up in a space where we are like social media right now or other things where you can't put the genie back in the bottle. Figuring out, having tough conversations, putting up guardrails in this space so that we can allow for innovation to flourish here in America versus other places, I think is critically important. And I hope that this body takes that seriously so that we can continue to lead, because we know that this is the race that matters. So I'm eager to work with my colleagues on this, and certainly appreciate the willingness to have the hearing today. Since this hearing is focused on capital markets, I'm going to just start there, obviously, about the strength and dominance of our U.S. capital markets. Take any meaningful metrics, whether it's size or market share, liquidity, innovation, accessibility, et cetera, all types of investors, we have far exceeded the remainder of the world, which is why it is so troubling to me during the last administration to see individuals in financial regulatory positions push policies that, in my belief, could severely damage that. You look at, for instance, Chairman Gensler's predictive analysis rule proposal, which just completely undermined the well-established technologies used by financial firms for years. Now, contrary to this, I want to point out the Alabama Securities Commission and what they have done, being forward-thinking and supportive of responsible innovation. They just established a financial innovation division in the state to help facilitate the responsible use of AI, particularly for our smallest businesses. We know that industries are using AI for things like underwriting or personal financial products, or to save operational costs that otherwise would be passed down to the consumer. But of course, we know there are also risks. And we've heard a little bit about that today, the massive surge in financial fraud in forms of AI-powered impersonation schemes and deep fakes or synthetic identities. And I heard the ranking member obviously mention social media. Would love to partner on that, because we see that getting out of control. We see what it's doing to the next generation, and I think we've got to be forward-looking on that. And today is the day. But if you're talking about financial fraud, consumers lost $12.5 billion in fraud last year. That's a 25% increase from 2023. And if you're looking at, impersonation scams, I think it's a 148% increase from April of 2024 to March of 2025. I mean, that is frightening, and we know that the American citizen is ultimately literally paying the price. So we've got to think through these factors, and one of the things that's been raised to me time and time again is AI-powered trading bots in equity trading. And I want to get your thoughts on that, because on one hand, this type of real market analysis can mean better liquidity, it can mean better price discovery, but on the other hand, there are certainly risks when there is minimal human intervention. And so I'll start, Dr. Cohen, with you, or Mr. Cohen. Perhaps you can speak to that. I'm curious of how these AI-generated tools can facilitate trading and execution while preserving the incredible integrity of our markets.
Thank you for your question, Senator. And I think it builds on Senator Warren's question. And there's a few things to note there. One is the firms themselves, are they regulated or not? We have to ask ourselves that question. If they're not regulated firms, then they're accessing our markets through regulated firms. And those regulated firms have to have proper controls in place. There are market access rules that exist today that we probably need to build on and make sure that we're taking into consideration any additional risk posed by AI. If the firm itself is registered, then it has accountability for testing any algorithms they put into the market, testing any of the models that they would then present into market for trading. Because as you may recall, in 2012, we had the Knight Capital incident where they had an algorithm that went rogue. And as a result of that, there was a lot of rules that were put in place into the markets. One was on the broker-dealer side, two was on the market access side more generally, and three, on the exchange side, they asked us to put tools in place to mitigate any of the risks that would appear in the market. And maybe, again, to the broader question, we then collaborate with other markets and harmonize to make sure that our rule sets are clear about how we're going to handle that situation. And the last thing we want to see is a tsunami come through the market where there's a deconstruction of demand or deconstruction of supply, and not know how to handle that not only at our market, but more broadly across the entire market. So there's been work over the last 10 years plus to ensure that we're putting rules in place. We're going to have to revisit them to make sure that, belts and braces are there for any new, if you will, new innovation or new risk that will be posed by, if you will, agentic AI, and especially models that are hard to reproduce the issue. So if you can't reproduce the issue quickly, you can't fix the issue. So those are the kinds of things we're going to be thinking about.
And Mr. Chairman, I'm out of time, but I have some questions for everyone. I'll submit those for the record. Thank you.
Very good, thank you. Senator Cortez Masto.
Thank you, Mr. Chairman, and thank you to the ranking member for this hearing today. It's such an important, thank you, all three of you, for attending. Mr. Kalinich, let me start with you. I was interested in the conversation you were having with Senator Reid on the extreme weather events and the impact of insurance that we're seeing. Listen, I'm from Nevada in the West. We're seeing wildfire risk. You talked a little bit about that. I'm interested in how you think the AI, third-party AI systems, or AI in general, can help us bring some predictability and certainty around this extreme weather. Let's take wildfire risk to address what we are seeing is the high cost now for insurance. Do you think that AI has the ability, if we are incorporated into this analysis, to lower costs for homeowners and bring some sort of affordability for the insurance they need now due to extreme weather risk?
So the way the insurance industry works is it is intended to have adequate capital for catastrophic events. So the wildfires, for instance, in Los Angeles, that's not putting the insurance companies out of business. The issue with insurance companies is the concern about two things: systemic, aggregated, correlated risks, particularly with respect to like wildfires, and second, the unknown unknowns. So the wildfires are not unknown unknowns. So it's in the first category. And what artificial intelligence is doing now is looking for patterns, looking for what caused a particular wildfire. What could we do to prevent it in advance instead of just paying insurance? Are the things that we can do to invest in insurance and areas to prevent the wildfires and then identify the wildfires? That's what artificial intelligence is focusing on, to aggregate that information to have a lower total cost of risk. The result of that is that consumers then could pay a lower cost of risk if they can show that they have satisfied those minimum criteria.
Right.
That we have fire hydrants within a certain
Well, let me just say, because that's what we're looking at right now.
Good.
How does a homeowner show that they're mitigating that risk now, right?
Right.
And so and my hope is that as we are dealing with these wildfires, we are focused on mitigating that risk, preventing these wildfires, and ensuring that we're doing everything we can to reduce the fuels, right, around a home, or we're creating fire breaks. We're doing everything we can to protect the structure, and a homeowner invests in that, then that is a mitigation that helps them lower their insurance costs. I'm hoping that is taken into consideration.
We're trying to take that under consideration, combined with also the utilities too, because utilities are a huge part
right.
to have to prevent that. But the homeowner should get the benefit of that when we implement those best practices. Yes.
Okay, thank you. Dr. Cox, let me talk to you about my concern, and you address this. Some of the bias, some of the hallucinations. I'm more interested in how we know what's going to happen. How do we, say for instance, put in place an auditing system to audit and catch that bias? Or how do we put controls in place to identify when a hallucination occurs? Those are the things that I think, as we look at guardrails or regulatory oversight, whatever you want to call it, to protect the data, I would ask your suggestions on that, something that we need to be thinking about in Congress.
Thanks for that question. It's a fantastic question. Like many things in technology having to do with responsible deployment, it's going to have multiple layers to a solution. So that's going to go all the way from where are we getting our data? Do we know where the data is coming from? Is the data correct and authoritative? To how do we develop agents? I think that it's a relatively new area of computing and engineering where we build agents that can interact, talk with each other, use tools, interact with software. And then there's a piece around governance tooling, like how do you actually track what's happening? Would but you have a hope of being able to figure out what went wrong and retrace your steps. And then there's a lot of that's human processes. So, we're seeing that emerge, and, we're building tooling at IBM that allows us to empower those stakeholders to be tracking, to be auditing, to be monitoring for bias and drift, because just because when you tested a solution doesn't, when you built it doesn't mean it's going to be working the same way in the future, all the way back to the data. So it's really a multi-stage, multi-part strategy, and that's definitely emerging, and companies like IBM and others are building the tools to help anyone do that.
So in other words, you are building the tools that will allow other companies, other markets, whatever you want to call it, other industries to be able to incorporate those auditing tools, those control measures to ensure when they are utilizing an AI system that they're trying to guard against the bias or hallucinations or any other types of activity that are not going to really have an impact on the truth of that data and the outcomes that they are seeking. Is that correct?
That's correct. And there's two important things that you said. One is, you said systems, it's not just the model, it's the whole software around the model. And then the other point there is that companies don't have to reinvent this and do this on their own. They can have trusted technology partners that help them achieve that.
Thank you. Thank you, Mr. Chairman.
Thank you, Senator Cortez Masto. Senator Blunt Rochester.
Thank you, Mr. Chairman, and thank you also to our witnesses for attending today's hearing. Dr. Cox, I'd like to start with you. First, I would love to follow up afterwards on the conversation with Senator Reid regarding the elimination of jobs and any kind of research that you have or know of. You mentioned specifically lower skilled workers becoming more productive, but not those jobs being eliminated. So as former Secretary of Labor of Delaware and focused on jobs, I'd really love to follow up with you later on that. But for my questioning today, AI, we know, can spot unusual trading faster and help catch problems sooner. This can make capital markets safer and more transparent, especially if the firms can prove that these problems really did happen with good records. For example, AI can look at suspicious trade patterns and alert regulators to investigate for potential market manipulation attempts. What concrete metrics should policymakers prioritize to validate that AI improves market oversight and stability?
That's a great question. This is going to have to, evaluation, I think, in general, is one of the most interesting and difficult parts of AI. The top level capabilities are very exciting, but the question of how do we measure things is really something that's arguably the most important part of all of this. And I think that's going to happen industry by industry, and it's going to have to happen with the partnership between public and private and different stakeholders to be able to define what ultimately, how you're going to measure that progress. And in business, we do this all the time. We're measuring KPIs of our success. It's an art, and I think it's something that we all have to do together.
So, to dig a little deeper, like what records maybe should firms keep so that the regulators can replay what happened? And I'll open these two questions up for the panel.
Thank you for the question, Senator. So there's two things I think about in terms of your question. One is we measure a lot of the outputs of these models. We should be focused also on the inputs. And so understanding the inputs into the models requires, was there good documentation? Did you have a handle on the data that fed the model? Who trained the model? All of those things should be what we have available anytime we put a model in place that we think is going to drive productivity, efficiency, or effectiveness. Because right now we are all focused on the output and trying to measure the output. And as you said, it's a little bit of an art because it doesn't necessarily translate, a KPI doesn't necessarily translate into your balance sheet, your income statement very neatly today because people are still exploring, understanding it. So the other part of it is I think about surveillance and fraud. I think we would continue to use the KPIs that we look at today. So for example, for our fraud solution, we focus on operational efficiency and operational effectiveness. Operational efficiency is false positives. Is the model allowing us to reduce false positives And if it does that, it allows the institution to redeploy that capital in a more effective way. On the other side of it, is it more operationally effective at identifying instances of fraud or market abuse? And we've just talked about this before. As good as we will become with our own AI modeling, and that will be the extra layer of defense. So AI will be a fourth layer of defense for us in that regard. But that's where that public-private partnership is so important, because it comes down to the data. How much data do we have to measure what we're looking at? And do we have enough data to identify it across the entire financial system?
You know, one of the concerns I have is for those who are smaller companies or first-time investors, you know, we know that this could maybe lower the cost and be an equalizer. It can tailor the needs to them. And we're talking about outcomes. We know we should measure this with outcomes and not promises. Mr. Cohen, which results should we track to show AI is truly widening access? And if you had to publish one metric each year, what would it be?
So at NASDAQ, we don't serve the retail community. We're not a consumer-facing company in that regard. But the metric we look at is very simple for us in terms of the market. It's the quality of the markets. And we'll look at the quality of markets in two ways. One is, are the companies, is the bid-ask spread for these companies what it should be? So is the quote quality for all of the listed companies on NASDAQ tight and available and liquid so investors can get the best experience, number one. Number two, we're also focused on the depth of that liquidity through the entire market. We do not want to just see the top 10 companies in the world be the most liquid and then everybody else really suffer from the lack of liquidity and the lack of market quality. So we are putting programs in place to ensure that we democratize market quality. That's really important to us across the entire spectrum of small, medium, and large companies, so investors can benefit from investing in whatever company they want and not look at the ecosystem and understand, well, you know, the top side, if you will, the top side looks much more attractive than the last 100 companies on NASDAQ. That we think about a lot.
Thank you. I have questions for the record, and I yield back.
Thank you, Senator Blunt Rochester. Senator Alsobrooks.
Thank you so much. Good morning, Mr. Chair, and I want to thank you for this hearing, as well as Ranking Member Warner. Say thank you as well to all of our witnesses for being here today. This hearing is so timely. Artificial intelligence is already transforming our capital and insurance markets, delivering real promise for efficiency, innovation, and access. But as we embed these powerful technologies into systems that shape people's livelihoods, health, and financial futures, we also have a very serious responsibility that we bear to ensure that they're used fairly, transparently, and responsibly. As lawmakers, we need to make sure that AI doesn't deepen existing inequalities or create new forms of exclusion. And that means asking tough questions about accountability, bias, data governance, and who gets left behind. So today I have just, my first question is for Mr. Cohen. I want to just tell you we're really grateful to have NASDAQ and to have its presence in Maryland and for its importance to the American financial system. And I understand that you believe there's great promise in embedding AI into NASDAQ stock trading businesses. And I'm all for utilizing AI to its potential, but we of course also need to balance innovation with risk, especially when it comes to our financial system. So my first question is, how do you believe that AI will benefit NASDAQ and its everyday shareholders? And then ask you how you balance those benefits to NASDAQ and the stockholders with possible risks to the financial systems.
Thank you for your question, Senator. So when we think about AI, we think about them in two broad categories: in our products and then on our business. That's how we think about AI. And with respect to on our business, we're looking for productivity, efficiency gains. We're looking to upskill our employees and make sure that they have the greatest teammates they can with respect to AI. When we think about our products, and this is what we already have AI embedded in many of our products, surveillance products that prevent market abuse, our fraud products that prevent financial crime, and our regulatory reporting products that ensure that companies can report with confidence around their obligations. So we do quite a bit with AI on both sides of the house. In terms of the way that we look at it internally, we want to make sure that we have the following things in place to ensure that our shareholders and our customers are benefiting from it. We want to make sure we have great governance, which is a lubricant for innovation. If you have good governance and involvement from your chief risk officer all the way through your CEO, you have policies in place, you are training your employees, and you're following and leveraging rules and policies that others will. So there's a greater, if you will, alignment and harmony between the way that we look at NIST and apply NIST across the financial system. That's really, really important. And then to your other question in terms of the way that we look to employ it in our markets, and I give you a little bit of a feel, I'll give you one example. We have deployed order types into our markets that are AI enabled and were approved by the SEC. The reason we did that was in part to democratize access to certain types of functionality that would improve investor performance that only firms that had the ability to spend on the R&D could do previously. So by democratizing it, smaller broker-dealers, retail broker-dealers were able to use this order type to benefit their investors in a way they probably would not have been able to because it couldn't have afforded the R&D that we put into it as NASDAQ. And so we put it out as a marketplace. The SEC approved it. It was the first of its kind, and we have aspirations to do more of that. So that's a great example of us democratizing access and improving performance for the broader market.
Thank you so much. I have just one other question to see the time is tolling that any of our witnesses can answer. As we consider federal frameworks for AI in the financial sector, we have to be clear-eyed about who benefits, who bears the risk, and how bias quietly but powerfully shapes outcomes. So for communities already facing barriers to financial security, AI can either close gaps or widen them. So the question is, how should policymakers think about transparency and accountability when AI tools are used in decisions like credit scoring, loan eligibility, or fraud detection?
Maybe I could say one thing. There's a 1979 IBM training manual that has a quote in it. A computer can't be held accountable, and therefore it should never be allowed to make a management decision. So we really believe that accountability question, obviously, the control of things should be done at the level of the risks, and everything should be reasoned in terms of what those risks are. And then ultimately, we have to assign that responsibility to humans, to people at different parts of that value chain. And a good governance structure, with clear roles and responsibility in a larger system, gives you the ability to assign that responsibility in a much more powerful and sensible way. But ultimately, people have to be responsible here.
Thank you. I yield back. Thank you.
Thank you, Senator Brooks. You've run the gambit of most of our members that have come in so far, and I want to thank you for taking the time today. I'm going to just take a few extra minutes, though, because very seldom do we have an opportunity to bring in experts like you and actually quiz you about specifics. We indicated in my opening statement today that we were reintroducing the Unleashing AI Innovation in Financial Services Act with Senator Heinrich, Kim Tillis, and House Financial Services Chairman French Hill. The idea behind this was to create literally a laboratory at the federal level, or a sandbox, as we called it, where regulators and those entities that were regulated by specific entities such as the SEC would have the opportunity to experiment using AI, but in a regulated way, and a way in which you could advance ideas and test it without creating an adverse liability for yourself, or while at the same time allowing the regulators to learn the appropriate way to regulate using new tools. I'm just curious, we talk a lot about how at the state level, the states are the laboratories from which the federal entities learn. But so much of this has to do with interstate commerce, and on a national basis, we need a consistency, if at all possible. Can we talk just a little bit about your thoughts about whether or not this is the appropriate path, and whether or not finding a way to establish this laboratory could work from industry to industry using once again, at the federal level, what are the experts that we find within NIST to assist us in putting this together? Mr. Cohen, I'm going to begin with you, but I'm going to give all of you an opportunity to think about this. And I know with the insurance and so forth, we love the idea on it. I'm still supporting state-supported regulatory. I don't want to go to the national for that. But I think to have a tool available at the national level to help the states would also be perhaps beneficial to the National Association of Insurance Commissioners and so forth. So, but Mr. Cohen, could you just briefly give us your thoughts about that concept?
Yeah, so we would be supportive of it, Chairman Rounds, and we think it's probably a critical element of the private-public partnership that we've been talking about here today. And there are three, if you will, guiding principles that we should have with the sandbox, and we should understand the following. What is the design? What is the goal? What are you designing for? Two, it should be temporary. You shouldn't run it as a pilot that then becomes a production-level sandbox. And three, it should be very controlled and well understood. And if we do that, then we can create a sandbox that will achieve its purpose, because otherwise we're going to run the risk, and we've seen this before, of folks using it to circumvent rules. So if I want to introduce a new product and I want to get it through somehow, I'm going to look at that sandbox and say, is this a way for me to potentially circumvent the process that I would need to go through to get a product approved into market? We have to be careful that we do not allow for that. So the design, the control, and making sure that it's temporary is really, really important as we develop these sandboxes that we are supportive of.
Thank you. Mr. Cox.
So I think I'm not going to comment necessarily on the sandbox per se, but I think the notion of having spaces where we can bring together financial institutions from all parts of the United States together with regulators is incredibly important, and also to have the ability to field and test new solutions. That is a critical aspect of any deployment of technology, especially a new technology. One of the things that we do with our IBM Cloud business is we bring together financial institutions who are customers together with regulators, and we have actually deployed new technologies experimentally amongst them, where they come together, try things out, bring their experience. We've brought in MIT, academic institutions and that. And I think those spaces are incredibly important for exploring first before you do something at larger scale.
Thank you. Mr. Kalinich?
So Texas just passed a Artificial Intelligence Act that goes into effect January 1st, 2026, and it takes into account some of the issues that you've raised, and some of them are hopefully in your new bill that we're anxious to review, and those include some thresholds that if you meet in the sandbox of Texas in the safe environment to evaluate the artificial intelligence threats, have you already satisfied the NIST AI framework standards? Have you already satisfied this? And it gives a presumption under the Texas law. So I'd encourage the federal law to, if it adopts the same kind of affirmative safety principles of the state one, it can be a model for all states to follow and get a much more consistent review of our artificial intelligence threats.
Very good. I want to thank you all. I want to thank my colleagues who have attended today. I'd like to thank my ranking member, Senator Warner, and his team for working with us to put this hearing together. I also want to thank our witnesses for their amazing and very, very adept expertise and statements today. I hope these conversations can continue in the weeks following this hearing as members use your comments today to inform their future policy actions. For senators who wish to submit questions for the hearing record, those questions are due a week from today on Wednesday, August 6th. Our witnesses have and will take about 45 days from that to submit any responses that you would care to for questions to the record that would be submitted. Again, I want to thank all of our participants who have been here today. And with that, this subcommittee hearing is adjourned. Thank you.